jumping in on US 30. Sell. Okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please. Secure.
Hey guys, good morning, welcome to the live session of Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Recording in progress.
Hey, good morning, good afternoon, good evening. Thank you guys for joining Stock Sniper Trading. My name is Ron, my partner is Dave. It is almost 11 a.m. Eastern in a couple minutes, and it is Thursday, August 15. How is everyone doing? Thank you guys for joining. First thing before we get started, make sure you guys can see my, I'm sharing the right screen here, and you guys can hear me, everyone on Zoom and YouTube. I'm on SST Super Systems Theory of Trading. I want to talk a little bit about this for the first like 5 minutes of the call, what this is, what we're going to kind of bring out for you guys in the next little bit. So I want to just make sure that you guys can see my screen, and everyone on YouTube, can you guys hear me and see the screen as well? Guys, the markets are going crazy right now. A lot going on. We'll talk about everything today, and then we'll get into some charting. But over here, okay, so it is this is a new program that we've designed here at SST, and we've called it the SST Super Systems Theory of Trading. So a lot of this is going to be theory, and then we're going to put it into practice in the live markets. But I want this to be where you can learn everything that you need to know about the entire financial markets with trading and investing, for passive income and everything for the rest of your life. This is not just going to be like a little Forex program. This is big. Okay, so this is going to be the whole financial education for yourselves. Okay, and there's going to be like 6 big topics that we're going to cover, but we're going to break those down into like 100 or 200 mini webinars. And when I mean mini webinars, you guys know me. Mini webinar is about 2 hours long. Like, that's mini. Some of these might go 3, 4, 5 hours, because it's going to be real hands-on education, answering your questions, taking the time. I don't care if you're a beginner, if today's your first day trading, and I don't care if you've been in the markets for 50 years and you're a professional. We're going to start this program as if we're all in this from the beginning, so we're not leaving anybody behind, and then everyone can start to get the same type of education. And I'm going to start like we're all beginners. So we're going to start like today's your first day of trading, and then we're going to go over everything. And then anything that you guys are not sure about, or something that you don't understand, this is the time to ask questions so that we can learn this, and then we can move forward, and then we can continue to learn, because there's going to be a lot of stuff we're going to drop in here. Okay, so first thing is like diversification. I want to talk about. Some of you guys already know what that is. Synergy. You guys have heard this word. How do we kind of put this together in the markets? Risk management. Obviously, this is one of the biggest pillars of trading that I feel like I've been around with you guys, with retail traders, for a long time now, and I find that the biggest concern is risk management. This is why you're probably wondering why you're not a successful trader or consistent, is because of risk management. So we're going to do everything in our power at SST to make sure that you can master risk management. Okay, once we've learned those, then we got to start to move on to adaptability. How can we adapt and learn how to adapt in these fast-paced markets and everything that's changing all around the world on a daily basis? We don't know what's going to happen tomorrow. We don't know 1 month, 1 year, 5 years, 10 years, but we need to learn adaptability in these markets. Because if you just stick with one strategy, you might find over time that that strategy is not working because the markets are adapting and you're not adapting. Okay, backtesting. This is a really important pillar in learning everything there is to know about the financial markets, because you can backtest everything, test your strategies without losing any money. A lot of seasoned traders have backtested majority of their life. So this is, I want to stress how important this is, because a lot of people don't understand the importance of backtesting and optimizing your strategies and working on the adapting of the markets. And then the last thing finally is monitoring and evaluation of your trading. You know what we talk about through journaling and things like that, but we'll help you more with that. Okay. So the SST super systems theory of trading, what it's going to kind of consist of, the super systems theory of trading is a concept that draws on the idea of using multiple trading systems or strategies together to create a more robust and reliable trading approach. Instead of relying on a single trading system, traders employing the super systems theory aim to combine different systems that complement each other with the goal of achieving better risk management and potentially higher returns in your portfolio in the future. Okay. Guys, I'm just going to go really quickly through this, 2 minutes, and then we're going to get into what we normally do. So if you're just joining us, just pay attention, because this is kind of what we're going to be doing at SST in the future. So if you want to join the team, I suggest you highly join the team now so that you're a part of this before we start launching this on a weekly basis. So key aspects of the super systems is going to be, number one, I talked about diversification. So by using multiple trading systems, there's a lot of trading systems out there. So by using multiple trading systems, traders can diversify their approach and reduce reliance on any single strategy. This can help smooth out equity curves and mitigate the impact of underperformance in a particular system. So if you find out that you're using one style of trading and it's not working out, maybe if you had multiple systems that you knew, you could kind of pivot with the market and your strategies. So that's what we want to help you guys with here. And there's multiple strategies. That's what I'm excited to get it more into stock and options, because with stock and options, there's so much strategies you can utilize in there, especially with options, covered calls, secured puts, the wheel, iron condors, the different strategies you can do, how to earn passive income by also owning the security. For example, if you own 100 shares of Tesla, you can start to make passive money by writing writing options and gaining the premium on the, and we'll teach you all about that, where you can reduce your risk while owning the security and gain money on the side. So these are things that I'm really interested in teaching. Synergy. The combination of different trading systems can create synergies that enhance overall performance. Each system may have strengths and weaknesses, and by blending them together, traders can capitalize on the strengths of one system to offset the weakness of another. So that's why, guys, that's how the markets are, and that's how you got to learn. Some days you're going to make some money, some days your strategy is not going to work, some days you're going to lose some money, some days your strategy is not working. But if you find that one strategy is not working, maybe you can move away from that and rely on another one that's working, or you can kind of just shift focus into another sector that's moving and things like that. So you want to learn as much diversification in these markets as possible. This is, to me, is one of the most important ones, risk management. So we're going to talk heavy on risk management in this program. Employing multiple trading systems can improve risk management by spreading risk across various strategies. This can help minimize drawdowns and provide a more stable and consistent trading performance over time. So I'm just going to yesterday's trade, when I got stopped out of that gold trade on the first one, I took a quarter lot position because it was kind of my first position to test out, because I was counter trading the overall downtrend there. It went initially into profit, but I was looking for the next area of to hit supply. Then it pulled back on me and I got stopped out. But then on the higher time frame, I saw that there was the demand level. So where we entered the trade yesterday, and we'll talk about it when we get to the charts, that was where I entered with a half lot. So what it was kind of a risk management system that I have where if it goes up back to the original position where I entered, at least I can recover my loss, and then I have a quarter lot running in profit if it continued to move like it did yesterday. So these are other risk management systems that you can use in your trading, because not everyone can nail a single trade and go directly right into profit. Sometimes the market is consolidating or will come back to grab some more liquidity. So if you positioned yourself appropriately and you know how much risk to place on the trade without panicking and not getting your emotions involved, and you're actually watching the charts and the price action as opposed to watching your P&L and just focusing on if you're in red or if you're in green, and you're taking your eyes off the most important prize is the charts and the candlesticks. Okay, so we'll talk all about that. Adaptability. The super systems approach allows traders to adapt to changing market conditions and environments. Different systems may perform better under specific market conditions, so having a diversified set of strategies can enhance adaptability. And then finally, backtesting and optimization. Traders utilizing the super systems theory often backtest and optimize each individual system before combining them. This process helps ensure that each component of the overall trading approach is sound and has been thoroughly tested. So make sure, guys, when you're learning a new concept or a new strategy or something that you've never done before, don't just jump into the live markets with your real money and just go in there, because you've been at this for a couple years now, and you probably know, as I'm saying, that that's not the best approach. You're probably going to lose your money. So practice it in a live environment, or you can back test with a demo account and things like that to see the probability of your strategy. How often does it work out? I see that some of you guys are talking about the ORB, the opening range balance of when Wall Street market opens. Some of you guys are following the first 1 minute candle. Some of you guys are following the 5 minute candle. Some of you guys are following the 15. And so you're locating the opening high and the opening low of Wall Street on that particular time frame. And then what you're waiting for is what this strategy is telling you. You're waiting for to break out above there and then to come back, pull back for the retest. Then you buy that, and you're looking for a 1 to 2 risk to reward on your money. It's got a good probability, but if you back test it, why don't you start right now back testing? Let's start off with SPY, SPY, and do it for every day this week, from Monday, Tuesday, Wednesday, Thursday to this morning and tomorrow, and test it on the 5 days. See if that, for example, if you were on the 5 minute ORB, see how many times it will play out to profit, how many times you'll get tagged out if you used it that day, but by back testing. And then you might see maybe it worked out 3 out of the 5 days this week with a proper 1 to 2 on your money, you're making profit. So then you can maybe back test it again, and then put it into physical work in the real markets, but see, maybe this strategy is not working while you're back testing it. So then it's telling you, your results are telling you, you shouldn't utilize this in a live market until you've perfected it. Okay, so that was just an example of what to talk about there. And then the last thing, I feel like a lot of traders are lacking this: monitoring and evaluating their trading through a journal, writing things down, whatever it is. Because if I ask you a question, hey, do you remember last week when you took that, what trade did you lose, what time was it? You have no idea, because you're not putting anything down on paper. So make sure, guys, you understand this and the importance of it. Continuous monitoring and evaluation of the combined systems are essential to assess performance and make adjustments as needed. Traders need to regularly review the effectiveness of each system within the framework of the overall trading strategy and your overall trading strategy and everything. Overall, the SST Super Systems theory of trading offers a holistic approach to trading by combining multiple systems to create a more comprehensive and adaptable trading strategy. By leveraging the strengths of diverse systems and managing risk effectively, traders adopting this approach aim to improve their overall trading performance and navigate the financial markets more successfully. Okay, so that will be coming soon. Join us, guys, at SST. We'd love to have you guys on the team, because you don't want to miss out on that. So this was yesterday's trade. I just want to talk about it. So you remember this leg up? I bought this leg right over here. This is the one I got stopped out on. So I bought this leg that was coming up. It did initially go into profit, like right here with these green candles, but I was looking to break this area over here to get green bodies to go above this candle so that we could have worked our way up to here. It came up, but then they rejected it back down. I had my stop loss below this white line. Below the white line was the hourly support. I placed my stop on that trade right there. So it did initially go up for a quick little scalp, but I was looking for a little more, and then it came back. So this is the one I entered with a 0.25 position. It was a smaller kind of feeler position for myself, and then I had marked down here, this yellow line was the daily point of interest. So I knew if it could get down there somewhere around here, I knew that this could be maybe a good area to enter. And then I saw that we also broke, this is where I got stopped out, we broke the hourly support. So then I saw it start to come down, start to pick up liquidity here. And then I entered kind of on this bullish move coming right back up. Right over here I entered the trade, and this is where I entered in on a 0.5 lot. And when it came right up to the prior area of resistance, I recovered my loss, that 0.25, and then I made kind of a little bit more with the 0.25 that I had running. And then you see after the call here, this is when we kind of ended the call right after 1 p.m. And you can see I never touched these levels. So it kind of consolidated here, and it could not break and close above this body here. A lot of rejection. So there is the resistance there. Then it ended up pushing down, and you see first green box here, we're looking to catch a wick and hold this structure to continue to go back up. It never held, so it closed below. So you got to flip that box red for the time being and continue to stretch it across into the future. So if you continue to do this, this is what I mean by like back testing and optimizing, what I was talking about. Review your trades so you can learn for the next time. You know, I used to always do this a lot, and I still do this till this day. So for someone to say this is not important, I'm going to debate you on that. I'm going to tell you how important this is, because now I can see. So if you didn't take out any profit up there, now you see how the market rotated all the way. Look at the red candle. It came all the way right down to where I entered, right there. So you see, if I had a break even, you're tapped out. And then there was a lot of buyers there that brought it right back up. You can start to see 50% of this bullish candle. If you kind of brought this green box up a little higher, to 50%, you see it started to come in here. The depth of market started to build higher than these wicks. So it came in here, back up, came in here, back up, came in, but then it came right back up to that resistance, came back down. So you see it's kind of consolidating. Then it started to continue to build, and then there's your body, 225 if you were still trading, that closed above here. So you could have simply just changed the color of the box, stretch it into the future, because it might come back there at a later time, and then there's your nice body, continue to go. We do wait for a pullback, but sometimes it's not there. So you got to judge where it closed. It closed near the high of the wick, so it opened, kind of ignited and popped. You could have entered anywhere on this bar and taken it through where it had enough momentum, because this is the second bottom. This is the first bottom, and here's the second bottom, the higher low leg, like the the W. And then it continued to push through the resistance here and come right into our red area of higher resistance pocket, and then look at the rotation back down. If you stretch this consolidation box, it turns to demand in the future. Then you could simply, with the price action telling you what's going on, just color code it the way how you want it and continue to move it into the future. And then it continued to push for new higher highs and higher lows. Okay, did that make sense yesterday, guys? Before I get started, okay, because sometimes I get off topic here, I want to say welcome everybody. Welcome Carlos. Tim, how are you doing? Thuzma, welcome. Miguel, Val, thank you. It's good to be back. Daniela, welcome. Mike, thank you for joining. Bavna, it's nice to have you back. Thank you for joining again. Cindy, welcome. Franco, welcome. Yeah, it's coming, Franco. It's coming, brother. So thank you, Samuel. Thank you for joining. And everyone on YouTube, I appreciate all of you guys as well. Thank you guys for all joining. Welcome. Armand, Pershindetia, welcome. Tony, thank you for joining. Zenel, Pershindetia, welcome, brother. Welcome, guys. No drip. You sold your shares at the level of Tesla. Yeah, we'll talk about Tesla. It was pumping. I kind of mentioned it yesterday at 200 level to check it out for the guys in the Discord. Guys, welcome. Bogaza, welcome. Diane, everyone. Thank you guys for joining. Okay, I appreciate all of you guys. So, do you guys kind of understand the super systems what because I kind of want to I think that we've done forex for 5 years now, and we have a team now that can handle the forex with Dave. We got forex Borex in there. Thank you, forex Borex, for everything you do. We got Shahab in there doing London's. So I kind of want, I'm going to still do forex with you guys, obviously, but I kind of want to branch a little bit into showing you guys the world of the stock and option market with the educating, and then we do some live trading with Tesla, with Nvidia, show you guys the option change, show you guys what to look at and the big names and things like that. So we're going to show you guys how diverse we are here at SST, and show you guys another side that we haven't really dug into yet with you guys. So I hope you guys do enjoy it when we do it, and I hope you guys ask a lot of questions, and I hope you guys can learn to have another source of income. Okay, guys, and okay, so today the plan is we're gonna do, I'm gonna, hey, start off with a fresh chart, guys. So we will do gold. We'll start with gold. And let's do S&P today, because then it will give us a gauge of the overall markets. Yeah, some days we'll do QQQ. We'll look at the Qs. So we'll do a lot of things, guys. There's so much. Like, look how many tickers there is that we can definitely be looking at. Okay. So SPY is pumping right now. We'll get into that, but let's start off with the news. What is causing the markets to move like this? So we had, Thursday was a busy day news. We had a lot of stuff come out of London, pre-London. In Europe, we have the French and Italian banks are closed today. And then we moved into 8:30. So we had core retail sales month over month, retail sales month over month, and then our unemployment claims. So they are green. Why are they green? Core retail sales are up. They forecasted 0.1% from last month to this month. Core retail sales are up. What is core for? What does it stand for? It's a change in total value of sales of the retail level, excluding automobiles. So this is good. The market sees that core retail spending is up. Sales are up. This one here too. Retail sales month over month from the 0.4% forecast to 1% is green. Retail spending is good. Unemployment claims, okay, these are our weekly unemployment claims, kind of give us a gauge of the labor market every single week, week over week. So they were forecasting 236 individuals applying for unemployment. It came lower, 227,000. So we have less individuals applying for unemployment, which is good. So they found work. They're working. So that's why we saw at 8:30 a.m. If you saw the big pump on the US dollar on DXY, it could have been attributed to this news. Okay, so before I move forward, guys, does that make sense? Do you guys understand how, if you're reading the folder, actual greater than forecast is good for the currency? So this actual data, these numbers that came out were really positive. So it was good for the US currency. So anything that's correlated with the US dollar, if the US dollar sees strength, maybe you see the pound depreciate, maybe you see the euro depreciate, maybe you would see gold depreciate a little bit. And then with money coming in, US dollar increasing, that money might be going into the stock market. So that's why we see the markets are green right now. So when you put every single piece of the puzzle together, then you're going to start to understand how everything is correlated. And then if you want to get into the stock market and then start to pick out individual securities like Tesla, I was saying yesterday, Tesla yesterday it was down 20% since the last 30 days, since the last month. And it was coming to a good area, a traditional area of demand, right below $200 a share. So I thought it was a good opportunity maybe to look for maybe a swing position or an overnight hold there. So I bought 500 shares around $200. And this morning when I woke up, in the pre-market, it was already up on news. It was up 4%. And then I believe it hit 5 or 6% today. So just looking for opportunities when they're available. It's like shopping. You got to shop for good deals. When Nvidia broke 100, that was a good opportunity to enter on Nvidia if you've never started a position there. Now Nvidia is trading at $120. We have earnings on the 28th, and analysts are saying that they're going to have positive earnings. It might continue to run going into earnings. So there is opportunities, guys. Just like you look for opportunities in Forex, there's great opportunities in the stock market. And then when you learn how to use options, it's a really interesting way of making a source of income in the markets. Okay. So we had Empire State Manufacturing, Philly Fed. We had Wall Street market open, and then they talk about mortgage delinquencies, the housing market, natural gas. We have some members over here. So when we kind of wrap up this call, or we'll still be on the call at 1:10, we have FOMC member Harker speaking this afternoon. So might cause a little bit of volatility, but not much. It's a low impact folder, and then we go into the close of the day. Okay, and then tomorrow's Friday. Little bit of news in pre-London tomorrow in the UK. We move into our New York session. Doesn't look too volatile. I don't see too much red folder news, so it might be just a normal Friday in the markets. And another thing, a lot of retail traders struggle with Fridays in the market, so put this to work. If you're struggling, look at why you're struggling on Fridays. What are you doing? If you know historically Friday is a bad trading day for you, and psychologically it breaks you, and do not be trading it. Just continue to watch and learn how to improve, but you don't have to physically be taking trades on a Friday if you know historically that day kills you and breaks you, and then you walk into the weekend, and then you got to bring that in. We've been there and we've done that, and we're telling you to really monitor the days that are your best trading days, which days are your worst trading days, and then learn from that. And there's no problems with taking a day off. I have a hard problem with the snipers in the group telling them to take a day off when they're up money, when they've exceeded their goals, when they're killing themselves on a day that they know that they can. I tell them just take a day off, and they're arguing with me that they can't take a day off. Then I can tell you that you're making this into an addiction. You're gambling now. So then now it's not a business anymore. You are strictly gambling. It's just like when you go to the casino and you're addicted playing slot machines, and you try to get your family member or your friend out of there, and they won't, and they continue. So we don't want to make trading and in that sort of fashion, guys. So please understand what we're trying to say here at SST, because you got to learn this, guys. It's the only way. If you want to beat this game, you have to treat it like it's your business and not gambling and playing games in here. These are our earnings. We had pre-market earnings. Okay, Alibaba, we talked about this. This was the bigger name I was more concerned about because I do trade US 30. So Walmart was at 7 a.m. Also, Walmart is not just a security just to trade or to see what's going on. It is a gauge of retail spending. I shop at Walmart. You shop at Walmart. Everybody in North America goes to Walmart to buy something in there. I don't know. They sell groceries now there. They sell everything that you need in there. So Walmart gauges consumer spending. They were since the last quarter, their estimates were 65 cents per share. They exceeded it by 2 pennies, 67. Their quarterly estimate revenue was 168.40 billion. They exceeded it, 169.34. Their growth was seeing positive, and it was a surprise to investors here. Maybe they were expecting that Walmart wasn't going to have such good earnings because maybe the retail spending wasn't that much. Maybe retail was being more conservative with their money, with the interest rates and the inflation and everything. But no, that it's showing us that still they're spending. So that might be why there was a pump in the markets due to some news like this. We had also John Deere Agriculture over here. They exceeded earnings per share. They beat their revenue. Growth doesn't look too good, I guess, in the future forward guidance, but that was also a surprise. So those are our corporations this morning. Obviously, you can invest in Walmart by buying the shares outright, or you can use contracts and options. And after hours today, Remember, Cisco was yesterday after hours, so it was kind of tech too. So what do we have today? We have Applied Materials, Coherent, H&R Block. No big real names I would be concerned about. I gave you guys heads up for Cisco yesterday, so that was the big name. In Discord, guys, we've sent out some fantastic signals over here. This was one that was sent out on gold to sell over here. So we're looking below. Sorry, this was US 30 Dow Jones to look for sell below 40,465 to come down, retrace back into this area, and you can start to see it got rejected. It came back up, rejected again. Then there's your volume. So if you miss this candle, that's a 15-minute candle. So we suggest wait for it to close, but then your next retest candle, it came up less than 50% drop. Maybe you got the second candle, but also some of us trade at the 5 minutes, some of us trade at the 3 minutes, some of us trade at the 1 minutes. So this is a key area you should be watching for the volume to close below on your particular time frame, and then use the technicals that we teach you. Is there a pullback? Is it ignited bar? Did it close near the bottom? Is it like all of these things you got to put in, because not every, that's the adaptability that I'm trying to tell you guys about. Every single candle we have to adapt to it, because it's not always going to be the exact break and retest and we enter and there's zero drawdown and it's right to profit. I would love that if that was trading every single day as you would, but we know that that's not how the markets move every single day and every single candle. Every single candle is a new candle, it's a new story. So that's why you got to develop your playbook in your head to know how to adapt to any type of situation that the market presents to you. And this is where you start to get more experience, and then you start to know exactly what you're doing and then you're just physically watching the candles for clues, because you know how to adapt every single second whatever it presents to you. So that's going to be what we're going to try and teach you guys. And I'm putting myself liable on that, okay, guys? So I'm going to invest heavy on you guys. I want you guys to really understand this, because it's going to take a lot of time out of my life, out of Dave's life to do this, but we're really passionate to do this. So I don't care about that, how much time I'm investing. I'm just worried that you guys are continuing to learn. That's my main concern. Because this is what I do, guys. This is what I'm passionate about doing. I don't even look at the clock anymore when I'm on calls with you guys. Just enjoy what I do. This was a sell on gold today, this morning, and you can see this was on the call with Dave and just killed it. Came up right up there. They pushed it down. Okay, you got supply to the left of you, and then you got your big bearish engulfing bar that kind of took out everything and then continued to push down. So, for example, if you miss your first 15-minute bar, that doesn't mean that's it. The trade is invalid and you can't make pips. You just got to understand the market was coming, rotate, and then boom, they slammed it. It came back up green and then got rejected. You can enter right there and take advantage of those candles, and still you're not going to maybe get 330 pips, but you still might get 100, 150, and that might be your daily goal and you're done. So guys, continue learning how to take these signals, trade management that's offered. If you have any questions, feel free to ask questions. We're going to go back into regular webinars and things like that, and then we'll break down recaps of the trade signals, and then you guys can ask questions, okay? And guys, everybody on YouTube, thank you guys for joining. More than 100 of you guys. If you guys can like the channel to kind of get more traders in here that are searching all about trading, I really do appreciate it, and we do appreciate it at SSD. That's how we found you guys to sign up with us, and so we do appreciate it. The more the better. I want to hit everywhere around the world and teach people a financial education that can possibly change your life. Okay, so this is the free Telegram that we offer. It's pinned at the top of YouTube. Guys, join it if you're not, because we give a lot of valuable information here and show you exactly what we're doing at SST in our live calls with not just myself, with Dave, with Forex and Shahab, covering all sessions. We do London, we do New York, post New York, some Tokyo sessions here and there, but we use Tokyo more for education. This is our daily schedule. These are the signals that were sent out, August 14. There was one that hit gold, hit stop loss minus 75. But if you look at all the other ones, they kind of make up for it. This is snipers on the live calls and the other sessions, taking the trades. Fantastic. A member saying best trade of the month for me. That's amazing, guys. This is what I was talking about Tesla. So when I kind of 4% at pre-market was at 209, so kind of up $4,400 on that, just by looking for a good opportunity, and it continued to go higher. So this was, I scaled out a little bit, but Tesla, it was a good little scalp off the bottom, or a little intraday trade. Okay, so let's get into, oh, sorry. One more thing I want to show you guys is Yahoo Finance. How important this is. When you're drinking your coffee every morning, take a look at Yahoo Finance, because there's a lot of news here. If I was just talking about Walmart, so what recession? New data cools worries. So we were talking about recession. Now Walmart is saying what recession? You know, the U.S. consumer is still spending money. So this could affect why the markets are green today. If we look at the overall markets here, we've got S&P, it's up 1.3%. Dow is up 1.1%. NASDAQ almost 2% today. Russell, the small caps, mid caps, 2.6%. Crude oil is up 1.75%. Gold is up 0.5%. The big tech names, Nvidia is up 3%. Adobe is up 2.6%. Tesla is up 6% right now, up $12 a share. So the markets are hot right now. These other ones, Dollar Tree, okay, you can Dollar Tree is great for dividends, and it's up 4% too, to $96 a share. Our top gainers, if you're looking for these, Palo Alto Network is up 100%. So you're going to find some pump and dumps always in the markets. We have a scanner that can look for these things. I love pump and dumps. If you understand the pip and dip philosophy that I teach, you'll probably fall in love with penny stock pump and dumps if you know how to navigate yourself around these and how they're orchestrated. I love these things. So we can find some unicorns in the market that go up 300, 500, 1,000%. They're the unicorns that halt the systems and things like that. So they're fun. We've been doing that for a lot of years. But you have to understand pip and dip. If you don't understand what that means, then you're not going to understand what a pump and dump is. But there is a lot of news around here on whatever you're looking for, okay? Yeah, Cisco after hours yesterday. So Cisco jumps on upbeat sales forecast. So if you want to read a little bit about it now, here's your article. Read on it and just gain as much knowledge as you can. The more, the better. The more you can put in your brain, the better it is. Okay, so what we're going to do is we're going to get into the charts. Let me just have a little sip of coffee because I talked a lot there. Guys, I'm sorry. I took 30 minutes out of your day to explain all of that. But I just want you guys to know what we have coming forward, especially you guys on Zoom. I want you guys to understand that we're going to be spending a lot of time together, and want you guys to really to learn as much as you can, okay? So right now, we're going to start off with top-down analysis. We'll start off with gold, and then we'll move into S&P 500. It's kind of gauge of the entire markets. So we alternate. When we started, we did S&P on Monday, I believe. Then we did Dow on Tuesday. We looked at NASDAQ yesterday. And then today we'll switch it up again. We don't always have to look at gold, but I know some of you guys love this security. So 8:30, we had the news we were talking about. Positive, US dollar went up, gold went down. Then it kind of found a little double bottom on the 5 minutes and coming right back up. Now we got it in consolidation, okay? So that's how it looks on the 5 minutes. Let's start on the daily. Let's get just a little bit better understanding of how we're moving on the daily. Okay, so the daily is making a double bottom in here. The daily candlesticks right in here, one bottom, kind of the second bottom. So stretch this across into the future, make it green, very simple, and this is our ongoing support. But you see it's making some nice body support right here. 50% is still holding. Right now we're kind of testing 50% of this big body candle at the start of the week, Monday. So you see where this might close nearing the end of the week. It might close very, very consolidated right in this 50% pocket, or we might come back up and close higher, ready to break out of here for a new all-time high, or it's going to retrace back down here. Okay, so I can see our all-time high supply. Like, it's very easy to see this. Go up to that high wick. That's the all-time high, 2482.83. Bring this box to the bodies, and then you start to see every single day that the buyers of gold came into here, into this all-time high supply. What happened? They got rejected out of here. Right in here they came. They rejected them out, closed it below here. They came in again, they rejected them, and then pushed that leg coming back down to this area of support. We bounced right back up again to test here on August 2nd. They rejected it back down. Again, another week of gold falling back down, but it's not bearish. Gold is not breaking down. It's the end of the world. It came back down with a higher low of support at 2380 with a big bullish candle come in Thursday, Friday in inside bar, and then we open this week Monday with a strong positive move again. So we've had all week to break this all-time high supply on gold all week. Monday we closed right at the high. We should have broke this Tuesday. We should have broke it Thursday, and we should have broke it on Tuesday. We should have broke it on Wednesday, and maybe possibly we should have broke it today. But you see that they rejected it back down. It came in again. They pulled it back down, closed it with red volume below here. We opened here and it came down. So let's follow today's daily candle. So we opened right off the close, the bearish close yesterday, and it was bearish where we came down. So they broke Wednesday's low and came back down right to here. So 24.32, that's our low of the day on gold. Let's place a purple line right here to represent the low of the day. Okay. And when we came down here, now when I look at the low of the day, I look at the structure below me. I look what we have. I have this big body candle. So you know when I always look at number one, 50%, I'm going to place a yellow line right there at 50% of that big body candle. And then I look at the number, it's around 2400 block. So I can see that around here, there's good support. So I use the yellow line as a point of control or point of interest, and then I look what's above me. I see the previous low is right there, and then I can maybe bring it back down to the yellow line. So if I'm looking for a zone now, what I do is I go to the bottom of that wick right there, and obviously I'm representing demand, so it's going to be green, and then I bring it right back down to 50% of that body and stretch it across, so that now I see that this one might be a block that the market is attracted to come into as opposed to this one. If it comes in here and still holds, then it might produce a higher low and then continue to try and take out that all-time high supply. If we lose this, then it's possibly the sellers are going to be in control, close it down there. We flip this zone red because the buyers will buy, and then they might be buying right into a heavy supplier, and then the supplier redistributes it back down to this green box. It's just like if we're scalping the 5-minute candles, no difference, but these are daily. So we still have to do a daily analysis to understand that gold is still building off the bottom. The depth of market is still getting strong. So we have now where we came all the way up today with all of that higher low support and that volume, and it could not even attempt to take out yesterday's high or even Tuesday's high. So when I place a purple line at the high of the day, it is still a lower high off the top. So this is what creates consolidation. When you got buyers buying and sellers selling, buyers buying at a higher low, sellers selling at a lower high, then it kind of coils the volume together in like a spring, and then eventually it will expand. It will. But sometimes the market needs to accumulate more and more and more. And then someone will get squeezed out of here, whether it's the sellers will get squeezed out if the buyers continue to push and accumulate, or all the buyers that are buying now gold on this daily basis, they're going to get taken out of the market if the seller absorbs enough and redistributes it down here. So following today's daily candle, we came back up to that high, and then they rejected it, and then they pushed it back down to here. So is there any critical levels? Look at this level right here where we had structure. Now I look at what structure was being built right here. That is, so I place a yellow line as a daily point of interest because it used to be resistance, resistance, resistance. Look at all that volume that it penetrated through, but it closed below that yellow line. And look at today. It kind of represents the close of yesterday and where we opened today at around 24.48 and a quarter. So around that 24.50 is that psychological level. So right now it's coming back up. Now what I look at is the body of yesterday's candle where it opened and closed. Where's half of it? Half of it is probably right around here. So I place one more yellow line at eyeballing yesterday's red volume, and maybe around 24.57, 58. That's where our resistance is. As you see how it's kind of pushing back up to 50% of yesterday's volume, and we're going to see if it can break a little higher, start to fill, or The sellers are going to continue to push today's daily volume back down to where it opened, and maybe we're going to push down here. It might just trade now in between this yellow and this yellow line. I can see the range from 24.48 to 57.58. That's a $10 range from the yellow to the yellow lines. That's about 100 pips. So if we go into the lower time frames, the hourly, the 15-minute, 5-minute, we'll see exactly how today's volume is trading inside there. Okay, so if we look at the overall move on the daily, it could be building and building again to possibly break out for a new higher high, or it might just consolidate in here. The daily is making a pattern where this was one leg coming up. That's our neckline now, right there at that yellow line, 24.45. And now we might come back up, but again, they might come up with a lower high or right back down here. What happens if the market pushes them down? That's that M top. That's that. And then here's where we want to see if volume will close below on a daily, below the neckline. Maybe it comes up, and then the sellers bring gold back down to here. We'll see if this holds, and then maybe if it breaks down a little further. Okay, so there's so much to adapt to on whatever time frame you're trading. So right now, if you ask me, is gold bullish or bearish today? It's hard to say. It opened bearish, then it came up, it was bullish, and then the sellers are pushing it back down. So it's kind of neutral, but it's neutral with more of green volume. So the buyers are still in control of today's candle, but there's no real significant like trend I can see right now who is in control of today. So then when I say that, it might be consolidating. Okay, so if we look on the hourly now, the hourly, we can see the big drop was here, Wednesday, 8 a.m. news, and then it moved into New York, and then it dropped. Remember us on Wednesday yesterday, we kind of started to buy the bottom right here on this candle, noon, and then we had that red candle, and then after the call, kind of here, we got that bullish engulf, and then started to move up. So we kind of almost timed the bottom yesterday's call. It took a while to develop, but you know, it's not easy to time the bottoms or time the highs of every single security. So you got to understand that it bottomed out there. Now, where is their hourly structure? I can see yesterday's bottom. If we look at where those bodies are and then where the bodies are today, let's place a white line there. So we can see that this is good hourly support right here around 24.40, 24.41 holding. I can see how the market came up now, the Tokyo session coming into pre-London, then they popped it up right up 7 a.m. Then they look at how they faked a lot of traders out at news. 8 a.m. they went up and then they slammed it down. And when it closed right there, this candle opened red, came back down. That's what created our low of the day at 9 a.m. on Wall Street. It came back up. We were still below 50% of this big hourly body candle. It came back down, closed. Exactly how today's daily candle looks. That's how it looks on the hourly. Then the next hour we opened with at 10, an ignited green bullish bar continued to come up, take out that previous high, but get rejected at this daily point of interest, come back down, close. And the body has 50% volume at the yellow line now holding at the daily point of interest. And again, this hourly bar right now opened up, slight pullback, holding above here and continuing now to try and take out here. But we got tweezer top highs on the hourly up here, and then it's coming down. This body is going to close in 16 minutes. So will it have enough volume attempt to close above that yellow line? Maybe we can push a little further, or is the next leg coming up? They're going to push this move coming down if it continues to get rejected up here. Okay. So let's move on to the 5 minutes. And this is what we're looking at on the fives. Okay, so there was the big drop on the news. There's where it kind of, so then I see if I'm a 5-minute trader right now, I can see where the W was formed. Okay, it came down. There's the neckline. If you cannot see that, we gotta get our eyes fixed. And then it came back down. Did it hit the physical double bottom at the low of the day? No. It made a higher low liquidity grab below the hourly support, which created this leg. We get back up to that daily point of interest, sideways, flag, and then they brought it right back up. We pulled back with a higher low, and now we're kind of consolidating. Are they going to push it back out of here, or are we going to come back to retest this yellow line down here and see if it can continue to build? Okay, so that's our 5-minute outlook. If you want to put a trend line, you can, absolutely. Okay, if you get a few touches in there. That's your trend line. So it's still holding positive. Maybe we'll see what will happen kind of above this yellow line here. I'm just going to place like a little red box just to show you where we're getting rejected up here. And then I'm going to show where we're building support. Okay, so see this big body candle at 1025, how it came and it physically closed above this yellow daily point of interest, and it closed above this structure right here. So when I see structure, I have a habit of putting my boxes. Anytime I see structure, right there it was resistance. Look at how the level turned into support now. So I'm just trying to consolidate for us, and again, it came right back down into the green box and back up. So if I bring this now into the future, we're going to see if we get our trend line violated down here. This might be maybe an opportunity to sell gold, but remember, this is an important yellow line. This is our daily point of interest. So this is where they might fake out the market down here. If it gets down here, you might see it come down red, but then it might get a lot of buyers in here and bring it right back up, and it may be closed. Then we take that buy back up. Do you guys understand what I mean by that? This is where the market could fake us out with an impulse. We could maybe take the sell to come down to the yellow line down here, but we have to be very careful down here, because that's on my chart, that's a daily point of interest around 24.48. So this might be where buyers are waiting to buy the dip. So if we're selling into it, we have to know that this is a higher time frame level. It might work out where the volume does this, comes down there, closes below there, comes back up, we flip that green box red, gets rejected, then they break this, retest that, then the drop. Okay, but we have to understand that this is where maybe buyers are waiting. Okay, right now gold is kind of consolidating now inside here. Again, we can scalp inside here if you like, or we can just continue to wait, see how things build. Will it continue to go back up, or will we break this level? Okay, so right now it's in a bullish flag. It is making higher lows, but the volume is kind of thinning out right now. Okay, so I'll give you guys this chart. 1 second. And then we'll move over to S&P. Any questions about gold? Let me know if you guys have any questions about gold. Zoom chat, there's a TradingView link if you guys want it in there. Okay, and then I'm just adding the Scalper Pro on. So there was a signal for a buy and a buy right there. We'll see if we get any signals as we go along. Okay, so I'm going to leave, excuse me, I'm going to leave gold right over here, and we're going to take a look at S&P. S&P is still driving. Okay, do we have to look at RSI on S&P? Probably not. Okay, look at, there is, okay, bearish divergence. Sometimes you get these signals. Okay, see how it's making those highs? It's continuing to make higher highs, higher highs. Look at our strength trend line. Okay, it's pushing down. Okay, so just simple. The price is going higher while the strength is decreasing, but the sellers have not closed below any kind of physical structure yet. So there is those little pullbacks, but they're getting bought up. They're getting bought up. They're getting bought up. So we have to, if we're looking to sell the market, we gotta wait. We gotta be patient. Okay. Otherwise, it's just gonna keep driving. You might have to. You gotta understand that if some of you guys are trying to sell this thing today, you're probably having difficulty unless you know how to just take a leg down and get out, come back up. If you take that leg down, you got to know you're coming into 50% of this big candle and no volume's closing below. Came back up. That was a nice sell opportunity, but it just got gobbled right back up and going back up. So you have to be very careful. Let's do a top down and see. Maybe this is going to approach a critical higher time frame level, and then maybe we can look to short this thing. Okay, let's start off with the daily. How does the daily look on S&P? Let's start off with new, very, very strong. Look at like today's daily candle. Number one, what levels stick out to us right away? I'm going to just do the obvious ones. Okay, so this one used to be resistance, turned to support. If I stretch this box across, like I'm just trying to point out the obvious. Okay, I know the volume is nowhere near this, but we still have to acknowledge this area. Okay, so there is good support being built here. There was that drop below here, came back up, we got volume closing, and now it's like a V recovery from August 1st, the start of the month, this 1, 2, 3, 4, 5-day drop, and now it's kind of coming right back up. But you can see here, this might be where the resistance is, because we tried to break out through here, and then you see there was a couple rejections and kind of gap up candles and a gap in the market here. So I'm just going to try and place where I think is a suitable area for a red box right there, okay? And I'm going to bring it across into the future, and I can see we're coming right into this red zone box right now on today's daily candle, okay? And then see that impulse break right there to 5587. I'm going to place a yellow line right up there just so I know in case it impulsively breaks out up there. That's where it got rejected, okay? Do you guys follow me so far? Now, we've got a lot of green volume below us. Here was another critical zone. So I'm just going to place a yellow line like right around here to tell me, yes, there was that break, but it got gapped up and came back up. It retested, had that big green bar there. A lot of volume was open and closed in this area. And see how that green bar closed above and it retested that yellow line perfectly and continued to push right back up. So let's just move up with this volume. Look at today's volume. Let's follow today's volume to show you how bullish this thing is. Yesterday, we closed near the high, but not as much volume. You can see today, I can see that 3 of yesterday's candles can fit inside today's. So that's 3x the volume, what I can see right now. And you see where it closed and it opened. Slight pullback, made our low of the day. Let's look at the level, nice psychological area. 5,450. Okay, so it's a nice psychological level. When you start to understand numbers in the markets, numbers are going to be your best friend. Okay, so look at how it opened. Did we dip down into here? No, good support. So you see right below the low of the day and that body. And here, if I want to draw a higher low green box, this is how I do it. Just like that. Nothing magical. Just I can see now that something is being built here. If it pulls back, if it comes down red, 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 maybe this is where the buyers are waiting to buy US 30, US 500 again to come back up. Okay, so this is a zone, but this is passive right now. This is below us. This one could be more active in the next coming days or weeks. So now let's follow the volume. So we broke above yesterday's high and look at us. I don't even know if we have a wick on today's candle. Like if I was to place a purple line, I'm just placing it right now. We are technically at the high of the day as I'm speaking, and it's 5,533. So now we see a full body candle open and where we are now. Let's just eyeball 50% right there. 5,400 and let's say 94, 95, just by eyeballing and place a yellow line. Okay, so all that is representing is this is 50% of today's volume. If it comes back down red, 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 I'd like to see buyers step in here and hold this position. 5,495. Then what I do too at the previous, I look at how the market reacted at this level in the past. I can see there's a wick there, a wick there, a wick there, a wick there, a wick there. There was a body that closed above and then it continued to move. So if I'm just trying to draw maybe a zone, if I need a zone there as well, in case it doesn't come exactly and touch the yellow line, I look just some areas how the bodies were created right around the yellow line. So right there, I get that body. Right there, I get that body. I come in here, and then I come there. Maybe I want to go one size, the same size how I have it above. I want to go same size below. So then that gives me a zone. Okay, so I'm not saying it's going to come red, red, red exactly and touch that yellow line and go up. It might touch the top of that green box. It might touch the bottom of that green box, but this is kind of giving me a zone. So, you know, sometimes when you use your Fibonacci, you know where it tells you exactly is the 0.5. Maybe that yellow line is the 0.5. And then above is kind of one standard deviation above and one standard deviation below. And then that kind of can be the golden pocket because, you know, Fibonacci has 0.5 and then 618 and 382. So that could be like our Fibonacci numbers. I don't kind of tend to use Fibonacci as much as I used to because I find that this is works for me. I don't, but if Fibonacci works, throw on your Fibonacci tool. Like go like this. If you have your Fib tool right now, go from the high up here on Wednesday, July 17th, and bring your Fibonacci tool all the way down to this swing low right here, and then you'll see exactly where we're sitting on the Fibonacci on this retracement coming back up, okay? So it is very strong. So if you're trying to sell this thing, this is what you're selling against. You're selling against a very bullish S&P 500 candle with a lot of volume, okay? So let's now break it down on the hourly. Okay, let's see where all of this volume, where did it come from? When did it come from? And how is it moving on the hourly? So obviously it came right here, 8 a.m. It was consolidating from Tokyo, London. You can now see these candles. You can clearly see the hourly structure. Again, if we can't see it, we need to go to the eye doctor and we need to get our eyes checked, or we can do LASIK surgery like I did on my eyes. Because if Ron can see this when Ron is 50% of the time he's high and he can see this level, I'm sure you guys can too. Okay. Do you see there? Like, are we arguing that the hourly candles did not break through this level? I'm going to say that they didn't. They tried. It got pushed back down. They came back up again. A big bearish engulfing candle pushed them back down, and then they came back again. Here was the breakout. Okay, so right here at 8 a.m. when there was a lot of news. Okay, so again, we're on the hourly. You can go down, you can break this candle down into the 30-minute, 15-minute, 5-minute, 3-minute, 1 minute. And then if you want to look to enter on those time frames, you have a big body hourly candle behind you, okay? So it opened and it pushed. Where's 50% of this hourly candle? Right there, the bottom of my green box, okay? So you see the bottom of that daily green box is 50% of the hourly candle. So if we cannot hold the yellow line, maybe we will hold right there at the hourly support, okay? That's how I go about things. If I need to color code, then I add a white line right here. Okay, so then I know if it comes down here, that's my 8 a.m. news 50% white line at 5,485. I color code my charts. I color code everything. I'm very simple. I like simple lines and I like simple colors, green or red box. Okay, I don't do anything too complicated. And came down again. It pulled back. We're still holding the daily line. We haven't even came down here. It's coming out of this green box. If I now want to see our last low in the green box, again, I know it's a lot of lines, but I'm just trying to show you. I don't normally do this, but if you want, you can place another white line right there. Right below 5,500 at 5,498.99, you see it's still holding support. It came back higher low. So the depth of market is continuing to build. It's filling up. There's 50% of this big body candle, and it touches that wick exactly. I know I'm going to over exaggerate with a lot of white lines, but I'm just trying to show you how everything is very technical. The 8 a.m. high is now 50% of this closing volume. When it came down red, I would have expected to see support here, but it didn't hold. There was more volume that came all the way down here, but then it's a higher low from here. We're still holding all of this good support in here, this volume, and it came back up and it made a new high and closed. Next bar, did you look at 50% here? I can just start raising the same line right up there. So there's 50% at 10 a.m. still holding. There was a pull back. It didn't even touch this. So what I can do now is to get closer to the 5 minutes, I can see exactly where my hourly support is right there. What I did was I used my white line as reference. I look at the previous low where it just came down to and stretch it across, because maybe in the future it will come back and test this area. We came back up, we took out the previous 10 a.m. high, and we just made the high of the day, and now it's coming down. Okay, so what we can do is we can kind of mark up our previous high and where the volume is on this candle. Normally I look at 50% like right there of the volume, but since we have a previous high here, I'm going to place it right there, okay? And then I like the number, 5,526.25 area, that quarter increment. So if it pulls down, I want to see if the buyers will hold here. If they can't, we're probably going to come back down and test this green box. But this is still one leg coming all the way up. On the hourly, we haven't even seen, it's just coming up,
Now, slowly, it's just kind of coming down. It might come back down. It might go back up, for a double top. Maybe they take out the high of the day and grab liquidity up there, and it continues to squeeze. But maybe if you're looking to sell on the higher time frames, maybe a double top, and then they push it down, maybe close below there. Then your opportunity to sell down in there. But right now, it's kind of just pullback sells right now. Okay. Let's go to the 5 minutes. So on the hourly, it's very strong. Gold is breaking out. Let's take a look. Okay, so gold, yep, gold is starting higher lows. Okay, 10 seconds to go. Let's see where gold will close. Okay, made that new high right here. That's another 5-minute high just to watch. Okay, so it closed. Did it close kind of above there yet? Kind of right there. So maybe watch for maybe a pullback, or if you're going to buy this, I would wait. I'm going to wait on gold, okay, because I just want to finish S&P. I'll come back to that. But this is now the 5-minute levels, okay? So again, the 5 minutes, if you want to see kind of what type of trend do we have going on the fives, it's starting to maybe potentially break right now, but it's too much in this tight consolidated range at the high of the day and right here. So maybe I'm going to just trap this area again and just watch and see what's happening here. Okay, so it came up, they pushed it down. Will it physically maybe close below here? And then maybe have enough momentum to take out this green box and drop. We'll see. Maybe this thing is going to continue to drive. Okay. RSI, yes, we talked about it, is showing bearish divergence, but that doesn't give us the right to just hit the sell button. Kind of got to wait for some critical areas to break down. I can see that now they're breaking that trend that was set from 10 a.m. Slowly breaking right now, still coming back up. Okay. So we'll leave these two side by side. I'll give you guys this chart in a moment, and we'll watch gold and S&P. And if you guys have any questions, now's your opportunity. Zoom, there's a trading view link for you guys. Okay, gold is starting to break out now. But just be careful, because we might see maybe like it came down. We can see that this morning. It's coming right back up, and then maybe they might drop it back down. Okay, so just if you're in buys, just careful up here. LSG, welcome. Shoutouts from the Philippines. Thank you for joining. Yeah, I'm also watching the dollar, Mike. I have it on another screen. So the dollar is trading at 102.886. It's kind of just consolidating right now. So careful with gold and the dollar right now. So you see how S&P is, again, they gapped it down. Wasn't a and then a big bullish engulfing candle coming right back up. So just be careful trying to sell yet. If this is another recommendation, if you're going against the trend, then start small with micro sizing and then feel it out. Because if you go in small, going against the trend, and then the trend continues to go in the direction opposite of you, then if you take a loss, it's a little loss, and then you can continue to understand what's going on. But if you go like a lot of traders go full port on a sell when they see a red candle against the trend, and then it comes right back up and they're in big trouble. But there's ways how to adapt to the markets. You got to also learn how to adjust your trading. If it's the first trade, like for example, if I'm taking a trade on gold, I haven't traded gold since early in the morning. It will be my first trade of the afternoon for gold and my first trade this afternoon. Do I go all in on, or do I kind of feel what's going on up here? Maybe I am thinking to maybe buy, but I don't know yet, or I'm thinking sell, but I'm not 100% confident. Then just start off Get used to the volume, get used to the volatility, see how it's moving, and then make your decision when you get confirmation or you get conviction to the trade. Unless you're 100% positive right off the hop, you're going to take the trade and you know what it's going to do. But then don't complain when you go into drawdown, because that's what a lot of traders do. They go too hard at the first trade, and then when there's a slight pullback, then they're complaining that the markets are a scam and they're rigged and what's going on. And you don't need to go all in. Scale in. A dollar cost averaging to approach. It doesn't work too much with Forex, but when you get in the stock market, like for example, if you like Tesla and you like this, it's not a pump and dump or anything like that. If Tesla dumped, let's say I bought at 200, which I did. I'm not going to say, let's say. I did buy Tesla at 200, just less than 200 yesterday, but I kind of positioned myself in slowly so that if it came back down to 195 or 190, I was not going to get stopped out or lose. I was going to dollar cost average in because I already thought 200 was a good supporting area. If I can get at 190 and I like the security, then maybe now I go in again and then I dollar cost average down to 195. Then when Tesla recovers back to 200, I've made money now because I dollar cost average only on securities that are like the Magnificent Seven securities. Don't do these with pump and dump garbage. It's hard to do with Forex and things like that. But dollar cost average approach helps. You can hedge with options as well, covered calls. We'll talk all about that. And you get paid the premium as insurance for holding the securities. That's another thing. Like we all have insurance. When you drive your car, you have insurance, hopefully. If you have a house, you have house insurance. Sometimes if you go traveling, you get traveling insurance. Covered calls and secured puts, cash puts are kind of like having insurance on your trade. So you can still kind of mitigate risk. If I buy it, I'm still earning on premium. So it's a good way for investors or traders to earn passive income every single day. You can be the one writing the call options. But you do have to own 100 shares of the security. Okay, so let me make that clear. Tesla is at $200. Multiply it by 100 shares you have to own in order to write covered calls and secured puts. So you have to have at least $20,000 if you're doing Tesla. If you have other securities that are $100 a share, $50 a share, $30 a share, then obviously it's lower. But I'm just using Tesla as an example. Do you guys understand at least a little bit of what I just said there or no? Yep, Mike, you can also get dividends. I've been talking about Enbridge Gas for the past 5 years. Enbridge Gas it pays almost 8% dividend yield, and it's not a very volatile security. Like it just fluctuates from the low that it came down to was about $40 Canadian a share, and it's trading right now at its 52-week high at $54 now, and it can go up to 60, but it kind of just fluctuates in there. But it will pay you 8% yield every single quarter and pay you distribute dividends. What I do is I have it where it just keeps buying back with the dividend. I don't need the money now. I'll need the money when I retire, and it just keeps buying Enbridge Gas, keeps buying and keeps compounding. It's a source of income, guys. Dividends you can get paid out every quarter, but you can strategize your portfolio where if you can do it with different securities, so you can get paid a dividend payment every single month, January, February, March, all the way till December, and you can get payments like the market and the securities are paying you as a shareholder. So it's a good way to make passive income. There's Manulife is really good too for dividends. Manulife in the US and in Canada. There's other ones, a lot of other ones. We're going to talk a lot about those things. Okay, so gold broke out Okay, but you see the previous high right here where I have it marked at 24.60. It couldn't tap into there, and now it's coming back down red. So just be careful. Okay, now it's retesting that daily point of interest right here at 24.57. Let's see if gold can still hold. Might just consolidate in here now. If we start to see gold breaking out of here, then we could get a clean break, maybe. Continuing to push. You see S&P is still testing the high of the day, so careful trying to short this thing right now. Okay, so gold tested that daily point of interest and came back up and closed. So that box in between there, that red one, I'm just going to mix green for now because it is still holding in there. Are you guys in any security right now? Like with the two that we're looking at, is anyone in a gold trade? Is anyone in a buy, or is anyone in a sell right now? And then I can help break it down. And then same with the S&P. Is anyone holding buys? Someone looking to buy, or have you guys already engaged in selling S&P right now? I like to know, guys. And then maybe I can trade with you guys like the same way and break it down with you guys. Val, you're in nothing right now. I'm in nothing, guys. I'm just watching. Guys, I want to point this out. Okay, every time we come on the call, I know we want to get trades and take trades and take trades, but sometimes you got to be patient. Even as a scalper, you got to be patient. Okay, and I know I'm scalping 1 minute candles. I know that I'm not going to get a scalp all the time. Okay, there's sometimes where I gotta wait to see for the opportunity, or sometimes I'm just observing what the market is doing. I'm trying to gather some clues. So I might miss out on a trade, and for me, it's normal. For other people, maybe it's not normal because you guys still are very impatient. Got to understand that some days, even when I'm looking for a scalp, I might be looking at the charts for 1-2 hours sometimes in the mid-afternoon. Like Wall Street is a different story. Wall Street has a lot of volume, so you can look exactly what you need in there. But when it comes to mid-afternoon, this time is tricky. Going into the close, once everything is settling down, sometimes you get a lot of ranging, sometimes a lot of consolidation. So you have to know how to navigate yourself around this. And then also here is where they kind of set traps, where everyone probably wants to sell S&P because it's really, really overbought. But this is where it becomes difficult in the mid-afternoon to trade this stuff. So sometimes it's if you made a good profit, don't be risking too much mid-afternoon because you might lose it. And then you're trading not the best times of the markets. Val, you made your profits for the day here for the education. Perfect. I made some profit today too, but I'm still looking for a trade if there is there. But I'm not going to force anything just to say that I'm in a trade. You know what I mean? Some days, guys, if you don't like it, then unsubscribe the channel. There's nothing I can do. But I'm not going to force trades just to keep YouTube and everyone happy that I'm in a trade or something like that. I don't care for that, guys. Honestly, if that's what you're looking for, find another channel. That's not me. If there's an opportunity, believe me, I'm aggressive. I get in there. But the point is, I want to get more into teaching as opposed to just being a live trader. I think we've done that enough, and I want to get more into my passion of teaching because I want to see you guys learn this skill. I know how to do this. Sometimes, not always. Sometimes the market catches me. Sometimes I get caught with my hand in the cookie jar. Wayne, My man, that's the way I like it. You caught 2 trades today on Dow and you're chilling right now. Perfect. Like, doesn't it feel good right now, Wayne, just chilling, knowing that you took 2 trades, you're 2 of 2, you made some profit, and now you're just chilling, looking. If the setup is there, Wayne, still be aggressive, but be, smart about it. Maybe you'll go 3 for 3, but just wait for those. There's days where some of you guys are waiting and you go 5 for 5. I've seen some of you guys go 10 for 10 on your trades. You don't need to trade 10 times, but if you're feeling it and you lock down on the markets and you got the time to chill and relax and have a good time, yeah, then that's a time where you can kind of compound that account. But even 2 is perfect, and that's a problem I'm finding with a lot of retail traders is they're lacking that discipline to hit 2 trades and know that's it. My day is over. It might be 30 minutes, 1 hour trading Wall Street, and you're done for the day. I know it sounds crazy because some people work 8 to 10 hours a day at a job, and then when they talk to some traders, they say I've traded for 1 or 2 hours and I'm done. It's mind-boggling to understand that, but that's why we trade, guys, is to have that free time to go and enjoy yourself. But you got to learn what your discipline is, what you're happy with, what is your daily goal. Then you're good. So you're not guessing every day. I know every day what my daily goal is. When I hit it, I know that I can chill, and then I can trade a little bit more, but I'm going to reduce my risk. I know if I'm below my daily goal, I some days I tell myself I got to hit that daily goal. I got to hit that daily goal. But then that's when days that I'm forcing, and then I lose money. So it took me years to overcome that, and that's why I don't want you guys to do that. You guys got to know that tomorrow is another day in the markets. We'll look for a trade tomorrow. Preserving your capital is one of the biggest things, is why you're going to make more over time to compound. So don't be losing your capital. Don't be giving it away. Even if it's small gains, even $10 a day, $20 a day, even on small accounts, it's compounding. Then it's just a game of, once you get the capital, what you've learned and the same percentage, and then you get that capital and you bring it into the stock and options market, because that's where I'm kind of saying, like the knowledge, like the term, that's where the big boys play, like Wall Street and the big investors, and the big money is in the stock and options. But you got to build that capital to get up there, because like I was saying, if you want to make that passive income with Tesla, you have to own 100 shares outright. You have to. So 100 shares at $200 is, I told you, $20,000 US. So not a lot of people have $20,000. So that's what I'm saying. If you're smart with getting money from Forex and start slowly building up your investing, your stock option account slowly over time. Remember, I'm long term. I'm talking long term, not tomorrow. 3 years, 5 years, 10 years, 20 years down the road, then you're laughing. But it's not easy to get there. I'm not going to make it sound like everyone on this call is going to be there. It's not going to happen. So only the smart traders understand what I'm saying here. This is a long game, guys. Scalping is fun. It's fun to compound the account, but trading is real long game. Okay, you want to do this down the road. Pablo, can you buy 100? Can you buy options and buy 100? You can buy options. You don't need. No, I was talking about to own the security, Pablo. That's for covered calls and cash secured puts to earn the premium, to make some extra money. Buy options? No, you can just buy the option outright. You don't need. That's for example, Tesla. Let's say Tesla is 210 right now. Okay, and I think that Tesla in 1 month, I'm buying the option. In 1 month's time, I think Tesla is going to go up from 210 to 220. Maybe that option sells for $2 right now. So then when you buy an option, you're buying a contract of 100 shares, Pablo. So that contract will cost you $200 US. That's it. You're in for $200. And if Tesla goes from 210 to 220 within the next 30 days, your premium will go up from $2 to $4 to $5. And then you can sell it on the open market at any time. You don't have to wait till it expires. And then the faster it goes, the more you make. So that will cost you $200. The most you can lose is if Tesla doesn't go to 220 in the next 30 days, your option will expire worthless. Then you lose your $200 because no one wants to buy your option at 220 when they can go in the open market and buy Tesla for 210. So your option expires worthless. And then the person, now let me tell you about the covered calls. The person that sold you that option, they made $200. So it was no risk for the person selling that. Do you know what I mean, guys? That's just a little brief little tutorial on options. Did that make sense? Do you want me to repeat that? Did you guys understand that? While we're doing that, gold is just consolidating and SPY is continuing to break out at the high of the day. So this is where I look up here. I know that the 5 minutes are completely overbought, but now we're again testing the high of the day. This is where I look for clues now where the market will do something unusual. Are they going to slam it down with a big FU candle? What's going to happen? So sometimes I'm just a spectator watching right up here. I'm chilling like you guys. So I'm watching to see what will happen here. Maybe I'll get a clue. And then maybe this might be the start of an opportunity this afternoon to look to short SPY, but not yet. Still a big body green candle. Pablo, trust me, I'm going to have full webinars explaining everything in detail about options. Samuel, leap options, that's more Yoda. Yoda's more into leaps. So guys, leap options are more longer term, like 6 months, 1 year down the road. So think about it, that to buy that option, it's cheap, because they're out of the money. When you buy an option that's more in the money, it's more expensive. There's a premium to that, okay? So if there's any frugal shoppers out there, you know that show that used to play on, I can't remember the channel, but it was the coupon clipper, those people that can go grocery shopping with a whole bunch of coupons, walk out of the grocery store with shopping carts full of $1,000 of groceries, and they're paying nothing. Sometimes the grocery store gives them money back. I don't know what it's coupon clipper it's called or something. But trading options is kind of like, if you're a good shopper, you can look for good deals, you can see when things are priced appropriately, then this is the market for you. If you understand how to go shopping and buy things, like Tesla was a great opportunity to buy when it broke 190. Maybe you bought that 200 call option. Tesla dropped more than 20% in the last 30 days, and it broke that $200 psychological. It came down to 190. If you were thinking that Tesla is minimum going to come back up to $200 and go more, you make more, but just to come up back up to 200, you would make money on that call option. And then we can also make money shorting the market with puts. So when the market was dropping the last few weeks, I had puts on the market, and I made some money while the market was going down. So you have the option to purchase a call option. Call is just simply you're buying, it's going in a long position, and a put is if we're shorting the market. Like here, if SPY starts to break down, and maybe I'm not in the Forex market, but I'm trading SPX options, I'll look at the options here, like below here. I'll look at the 5,530 option. I might look at what the 5,525 put is selling at right now, and maybe I'm going to buy it. And then the next thing is, options expire weekly, monthly. So do I think that tomorrow's Friday, so the weekly options are expiring tomorrow. They're cheap right now because they expire tomorrow. So for scalper or intraday trader, I'm normally trading the Friday options that expire. So if I'm looking to scalp this thing, I could get a good deal right now on Friday's options that expire tomorrow at 4 p.m. If I'm looking to say that SPY will come back down here by next Friday, you have one whole week to get SPY to come down here, but that option is going to cost a little bit more money because you have an entire week and a day to cover that position. So there's a method to the madness, guys. I'm going to figure out what type of traders you are. Are you guys scalpers? Are you guys intraday traders? Are you guys more swing traders? Are you guys investors? And then I'll have everything for everybody. So if you're a swing position trader, then maybe you look for the contracts are out of the money, maybe monthlies. Leaps are longer term. Okay, and SPY is continuing to take off, guys. So it's a new high of the day. We got to look. Let's go to the hourly on SPY and see where this thing can find some hourly or 4-hour resistance. Let's take a look. Okay, so see how we're trading in this red box? The last time SPY was in here was over here where it made those all-time highs in August, over here on August 1st. So let's take a look at some structure inside this red box right now where SPY could possibly come to. So inside here, you got this big red bar that came down. I see structure right here. See here how there's a body, 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 and a body, and a body. So let's place a white line right around here. 5,547. Right now we're trading at 5,540. So it's just 7 points off of that area. So maybe that might be, and look at how it's 50% from the red box. That was the higher time frame daily. It's red to red. About half of it is right there. So if we go back to the 5 and 15 minutes, that might be where a sell, if it taps in there, like I'm telling you guys, like that might be an opportunity where I'm going to maybe possibly sell the market. If it comes all the way and it kind of triggers in there, maybe gets rejected and maybe does like a double, that's where I want to take that sell back down into here. Okay, back down into the pocket deep in here, because that's where I feel then it will be extremely oversold on the 5 minutes. There is the bearish divergence still intact, but now it's came up to an hourly area of resistance, and that's where I think maybe that's where it will start to push down there. But we might not even get up there, okay? So I gotta now follow these 5-minute candles, what they're doing. Maybe if it can come back down, close below here, I might be looking to short this position right here. Okay, but I know that that's maybe where I got to place my stop loss. So I'm also, when I look at that, if I'm taking any sells there, now I know that strategically maybe I want to place my stop loss above where the hourly resistance is. So does that make sense, guys? You know, I'm not saying my stop loss is going to be there because I'm also going to measure the move, but that's a good indication if I'm going to sell in here to keep my stop above that hourly resistance. And that hourly resistance was from August 1st. Today is August 15th, so that was over 2 weeks ago. Okay, so let's just continue going side by side. Okay, so gold retraced right back down again to that daily point of interest yellow line, green box, so it's coming right back up. Now let's see if they slam it back down with a second rejection up here, a double top, and then we actually break the trend line and this daily point of interest. Then we can maybe potentially look to maybe short gold through here. Okay. Tony, we give signals for, yeah, we're going to get, we do Dow Jones, NASDAQ, S&P. We did DAX. DAX caught a big move this week. So those are for the index. And then we do gold and crude oil and a lot of Forex. Guys, everyone on Zoom, I just want to give a shout out to Rob Mack. Okay. He is in the Forex Discord channel on a daily basis, providing charts on GBP USD, Euro USD, and other Forex pairs, majors and minors. If you guys, I see that the Forex channel is not getting enough love and it's not getting, because everyone's interested in commodities and index. If you guys want to go and learn from a Forex pro, I call him, he is the go to Forex. Get in there and follow Rob Mack, follow his charts, follow his kind of signals, his setups, and ask questions in there because he's in there on a daily basis. And I think a lot of us are forgetting about Forex, myself included too. Maybe I got to start to do more Forex on these calls as well and not just stick with gold and index. We got to do some other things in there. But shout outs to Rob Mack for holding down the Discord Forex channel. And I encourage all of you guys to get in there and learn a little bit more about Forex because you can catch some pips in there too. You know, and then our other Discord monitors and admins, Scotty, thank you for everything you do. Carlos, thank you for everything you do. Yoda, Armand, SST Albanian Sniper, thank you for everything you do. And Forex Borex and Rob Mack, thank you guys. But make sure you guys go in there and learn from Rob because he's on point. I've taken a lot of his charts and made money off of them. So thank you for that, Rob. While I was on holidays, I was following some of your charts. They were clean. I liked the setup, and just with my eyes closed, took some buys and took some sells and made some money. Yeah, Forex is a little bit more, guys, less volatile than trading S&P and gold and crude oil. It's GBP USD is a safe security, safe. Euro USD is a really clean one. If you're starting out, it's a great way to learn. I highly recommend you learn Forex pairs before you get into these fast-moving commodities or indices. Does anyone want to talk with me? I'm kind of bored here. Anyone want to talk on Zoom? Welcome, Aaron. And thanks, guys, the moderators we have on YouTube. Tony, Iliud, welcome. Rafi, thank you for everything you guys do. Hurst, if you're here today, thank you for everything you do. Appreciate all of you guys. Patrick, what's my experience when I started futures? Futures is the same exact thing we're doing, just different ticker names. Nasdaq is NQ, so it's just instead of a US 500, we're looking at SPX. Futures are just the numbers are obviously different because it's a futures market, but the price action, everything is the same. So futures is not a hard transition from Forex. It's less, the spreads are more favorable, commissions are more favorable. For US residents, it's more ideal for you guys because a lot of them are regulated in Chicago and New York, the futures trading. So it's perfect if you live in the US. But a lot of people are attracted to Forex because of prop firms and things like that. But there is also futures prop firms out there as well. They just have, you got to understand their rules and what they do and how they orchestrate their business. So, but we'll do futures as well. Not much different than what we're doing. Yeah, instead of looking at US 30, Dow Jones, Miss Jones, it's YM. That's the ticker. And then they're more reliable, the numbers, because they're trading 24 hours around the clock and they're regulated. So futures market is really safe. I encourage you guys to get into futures trading if you guys can. It's no different than what we're doing here. Just like if I show you guys different charts, we're going to look at just the futures charts. Apex and Top Step are the prop firms available. They're a little bit different from each other. So that's where I suggest you guys, if you guys are interested, again, when you're having your coffee or you're relaxing, read up on both of those prop firms and see which one is best for you, because they do both have their pros and cons, but they are regulated. Okay, so that is important. Okay, so our SPY came a little high. This is, remember, so I want to see how it's going to trade at the high of the day. Okay, it's coming down now. Will we get some red volume pushing below this previous high? Will it come back up? Then they'll push it down. And then we're approaching maybe 1 p.m. in the next 30 minutes. Maybe we might get a little afternoon reversal. Gold is now breaking down. Okay, so I wasn't excited to take a buy up there. I was more excited to see what will happen over here at this daily point of interest. So right now it's breaking. There's 2 minutes to go. It's a new 30-minute candle. It's 12:30. So let's just see if gold can physically close below here. Maybe it might close near the low. It might be an impulse red candle come down. We'll see where it closes. Maybe catch a pullback and maybe enter into a sell here. Crash, you're finishing out this week on Top Steps demo, then starting my challenge Monday. Good luck, bro. That's amazing. I like that too. I got respect for you for starting out on a demo. 99% of traders these days are scared to say the word demo or feel inferior because they're using a demo account. But demo will teach you, and it will teach you exactly how that prop firm operates. So then if you make mistakes, you learn. At least you're not buying the prop firm for a couple $100 and then you make all the mistakes and then you lose. Why throw your money away? Smart money, guys. Be smart about this. If you have to use a demo for a little bit, use a demo. Nothing wrong with it. I tell everyone every single day, if you got to use a demo, don't worry about it. If you're learning and you don't want to use a demo, deposit the minimum amount of money, $100 in your live account, and just use the smallest sizing possible. Even if you're making 10 cents, it doesn't matter. This is a game of percentages or pips or ticks or whatever you want to trade. Okay, I go by percentages. Like on that Tesla trade, I made 5%. I was more than happy. I was looking for 1 to 2%. And when I woke up in the morning pre-market, it was already up 4 or 5%. So, sometimes when you're trading the markets and you got that position and you see pre-market, you're already up, you're kind of excited. And then it continued to push when the market opened. So Nvidia did the same thing too. Nvidia from $100 is at 120. Okay, so a sell now, SST Scalper Pro is telling us to sell right now, okay? But right now, the candle broke and came back and closed. So right now, I don't know if you can see it, but there's a green bar that's building. Let me just scroll in here, okay? So maybe it's coming up. Will it test 50% of the previous red bar? Or will it be a lower high and get rejected down here? We still do not have any red volume closing below this key daily yellow line yet, but we'll see. Will it come back up and then they push it back down? Okay, so I can start to see they rejected it there, rejected it there, rejected it there, rejected it. We got a lot of offers up here pushing gold down, but let's see if it can continue to break this level here. Okay, and I'm also watching S&P, how it's still just kind of consolidating right here near the high of the day. Okay, so that's a good push down. Now, if I take this trade, this will be my first trade of gold. Maybe again, I'm going to go a 0.25% trade, because if it pulls back, then it gets hammered down again and goes down, maybe I'm going to put in my 0.5%, like kind of how I did yesterday. Unless I'm absolutely confident that this thing is going to drop and break down, then I'll go in with my 0.5, but I'm still not 100%. So it could be an impulse, but then I know that it could come right back up to test back in here for the second top. Because to me, this looks like it just came up one time, they rejected it back down, and it could come back up. But if I take this out right now, I know that I might go into drawdown. Okay, so you got to understand that. There's 3 minutes to go on this. Now, if I want to focus on this candle alone, I go to the 1 minute. Here's the 1 minute bar that's going to close right now. Maybe I'll enter in on the 1 minute. Here's the close. It's closing near the low on the 1 minute. They're open red and dropping right now. Okay, so it came right back up. Now let's see if I can sell it back down. It's coming back up. Okay, and draw. Okay. I'm going to enter, I'm putting a sell in on gold. I'm entering on the 1 minute, but I'm going to play the 5 minute volume, okay? So I'm going to adjust my stop loss now on the 5 minutes. This is a 0.25% trade I'm going to do right here. Okay, so I'm in a sell, stop loss. I can place it above the structure right over here. Okay, so I'll show you, here's the structure. I'm going to place my stop loss right above those previous rejections and above that structure. Okay, and I want to see also if this 5 minute body will close below, come back up, and maybe I might enter into another sell. Okay, my ideal goal is to get volume to come down and break this structure and drop down maybe into our green box down here. But I like to measure the moves so I know exactly maybe how much Okay, so down to that is about 10 to 12 pips. Down to the bottom, ideally somewhere around here, could be around 30 to 40 pips down there. Okay, so we'll see how this develops, but this is our first candle. I entered on an impulse. I want to see how it will close below in the next 90 seconds. So I'm currently in a sell on gold on the 5 minutes right here. And then if this closes below here, the green box, I'm going to naturally make it red to illustrate that there could be an order block of supply. And then if we do come back in here, maybe the sellers will push it right back down. Okay. And also watching S&P coming back down right down in here. Okay, so we got 1 minute to go on the close. I'd like the body to physically close below this yellow line. Okay, and the last 30 seconds are very important. Okay, so here's the close. Remember, let's try and measure 50% of the body just in case it pulls back. Okay, so open, close, half of it is right here. So if it comes up green, 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 I'd like it to get rejected at the 50%, but I know it might come to retest the critical daily level up here. So the green box, I'm now going to naturally just make it red to illustrate that this could be ongoing resistance or supply, whatever word you want to use. Going forward, my stop loss is above the red box and above these previous high wicks that got rejected above this structure. Okay, so just in case it does come back up, that's why I'm giving it some room to breathe to allow the sellers to absorb the buyers and then maybe redistribute it down here. Okay. And now S&P is breaking down. Okay, so again with S&P, I'm going to watch to see if S&P closes below this purple line. Again, it can maybe physically come back up green, then they push it down. So if I don't enter here, I'm going to look for the second opportunity to enter. But right now, let's see gold come down. Let's see if it can come down and test this previous 5 minute structure here, kind of when we started the call, 11:15 to 11:30. Oh, S&P, okay. So this is, and remember, it might fall, it could fall down to that hourly support down there on S&P. That's why you got to be careful buying at the high of the day, guys. It's unless you understand, you can get in there, you can pip and you can dip. You have to be very careful up here. I was hoping to sell at the hourly resistance, the white line up here. But this could just come down and come back up, and then maybe we could possibly sell the second leg. Also with gold too, okay? Okay, so we made lower lows, we got a lower high. Now it's just, we got to follow where the volume will close. We still have a lot of time on the candle. It seems like 5 minute candles take forever. I don't know about you guys, but we still have another 2 minutes to go on this. So some people say 5 minute candles are very fast. Some people say that they're pretty slow. But just continue to keep your eyes on how it opens, the high, the low, and the close. See, every time it comes down here to this point, they're bidding it right back up. They're bidding it right back up. So there's a strong area of support that they're building here at 24.55 above this area, because maybe they don't want this structure to break. So there is still some bidding going on in here. Okay, so that's why naturally it could pull back up into here. So if it comes into the red retest box, this is where maybe if the sellers want to sell this position, this is where they have more offerings up here. They're going to absorb the buyers. If there's more demand, then might cut through these offers and start to drive back up here. And that's why we have a stop loss in trading, because not every trade we take is going to be 100% correct. So you still have to have a little bit of risk management in case the trade goes against you without over leveraging. Okay, so we have another 1 minute to go. And you see how it's kind of just consolidating down here. Sellers are pushing it down, buyers are bringing it back up, it's coming back down, going back up. So it's kind of like an inside bar around here. But maybe the last 30 seconds will show us who will close this candle with momentum. So here's the last 30 seconds. And also S&P is about to close below this previous daily high, coming right back down. Might come back up to retest this, then drop, or the buyers might bring it right back above here. So let's see. Also with S&P, here's the close on gold. So it closed with relatively little red volume. We just opened ignited red, so naturally they want to maybe attempt to take out the low, but we have bidders right away. So it might rotate back up and then push back down. But let's see here. Okay, and S&P closed below. They gapped it up green, so it might want to come up to test 50% of that red candle or the breakout area, the purple line. Okay, it would be nice if we get these small, like kind of indecision doji candles, maybe consolidating down in here, and then maybe the seller to absorb and then redistribute with lack of buying interest. Okay, it was a good retest, came up on S&P. It may possibly continue to push lower or kind of consolidate right in here. So if you're selling S&P, maybe I want to wait for a pullback to sell a pullback, because it's already been 4 red candles kind of pushing down. Yes, it could come all the way down, tap that hourly support and go back up. So maybe I'm going to wait to see, because now it's dropping, but the overall strength was always uptrend. Maybe it will come back up, and then maybe I can look to short back here and then take it down. Okay, so I'm just in gold right now. Again, we got this small doji candle, really relatively low volume. So it's anybody's game. So the buyers can kind of bring it right back up here. Let's let this thing breathe a little bit. Our previous 15-minute candle was pretty bearish. Okay, this is a new 15-minute bar that just opened up. So it came up, they are holding it down. Now all we need is nice 15-minute red volume to continue with this bar to take out these 15-minute lows. And then us on the 5 minutes, it might come right back down to this green box of support down here. S&P is really dropping right down to the white hourly line. Okay, and that would be like a target for me. For example, if I entered on this candle and took it right down to there, that would have been a 2-bar scalp, like kind of the way how I trade. From there to there, it tapped that white line. That would have been great execution if someone took it. But then I kind of respect the white line. So this is where it could possibly pull back up, or if the red volume continues to close below here, then the white line momentarily will turn to resistance, and then sellers could therefore push it down to the bigger green box. Okay, so we got 90 seconds to go on this candle bar. Hasn't really moved significantly in here. Aaron, a lot of top wicks on gold on the 1 minute. Yeah, so maybe still accumulating. It's not ready to redistribute to the downside yet. We'll see how it develops here. Maybe going into 1 p.m. might change things up in the next 11 minutes. Okay, so I always pay attention to the last 30 seconds. So sometimes, guys, if you see me go quiet, I'm really paying attention to what's going on the last 30 seconds. And then you see how S&P came directly down to our hourly support and coming right back up. So that's why I use these lines as either entries or take profit and things like that. And I trade very robotically because it came right down to that hourly support that we marked up and went right back up. Okay, we got a nice red volume bar pushing now the last 20 seconds on gold. Let's see if they can maybe close it, and then we can take out this 15-minute support level. Okay, there's the close. Okay, open red again. Can they take out these two bottom tweezer toe, not tweezer toe, tweezer bottom low wicks and just take out this red line? Okay, right now let's see if we can do it with this ignited red bar. It has the momentum. It opened very bearish with a lot of contracts on offer. Let's see if it can come down now with volume. We need higher time frame volume. We need our 15-minute. It's set up perfectly. There we go. Come on down. Okay, so we tapped into our 15-minute support level right here. So there could be some pending bids waiting in there and develop a wick and come back up. But we have now the comfort that we have an ignited red bar behind us. So we know that it's opened very bearish. So it's going to take a lot of buyers to flip this candle. So we know that there's buyers here, but if the seller keeps absorbing them, then maybe it's going to attempt one more time to come down here and just attempt another low. But this might provide some support here, just like how S&P found support there. So now you see how it came up, it found the support. If they flip this candle now, then we don't have that ignited open anymore. We lose it. Then the candle can turn into a hammer and start to retrace back up. So there was support there. So sometimes when I'm scalping, I didn't do it on this particular situation, but from there to there is about 10 pips. If you're kind of looking for maybe a TP1 or a quick little scalp, that's traditionally what I look for. Same with S&P. If it was from here to there, that's a quick little scalp. I'm holding this gold trade to see if it will be a bigger one and go down to 30, 40 pips down into here. But we still haven't had a natural pullback yet. It just made lower lows, lower highs, lower lows. It tapped into here where we had this big leg of green candles come right through here. It started right here at 24.55. So naturally it's happening again. But we might have more offers and more supply above us to absorb this leg that's coming up. So that's what we got to watch for, okay? And you see now how S&P is kind of reversing here. It came down to the hourly support, caught a wick, opened, and now we got a green bar. So we're going to watch S&P if it comes up and it maybe possibly go back down. Maybe we'll short the second leg of S&P, or we continue maybe to buy S&P. Okay, so now we got a hammer candle coming back up against us. But again, let's see, we got some resistance here, some resistance here. Will we start to push these buyers down? And then if you look on the 15, you know, see where the 15 came and broke prior to 11.15, came back up. Came back down there, back up, came back down. So we just came back down on the 15 again, and that's where there's a lot of 15-minute support. But we still have 7 more minutes to go. So we got to watch and see if the sellers will continue to absorb and bring it back down. Okay, so S&P came back up, came back down, still right in here. We'll keep an eye on this one as well. Okay, so 1 minute. So it is a hammer candle. Found the support right there. We couldn't break it. So naturally the buyers are coming back in. But we still gave ourselves some room to breathe up here. Fortunately, the trade came back to break even now. So 10 pips in profit, now back to break even. May possibly go into a little bit of drawdown now, but we've got to watch and see how the body will close. Okay, so initially it came up again, pushing it right back down. Last 30 seconds, 25 seconds to go. This is where it counts. And then we're 5 more minutes to go until 1 p.m. And then we'll get that hourly momentum in the market. We'll see if maybe it will continue to the sell side or if the hourly will reverse and come up a little bit. Okay, so we closed with some green volume and right away it opened red, taking out the previous body. So a big seller just came in the market right now. And let's see now if it has momentum to take out that wick. This is a bearish engulfing candle perfectly the way how it opens. And this candle closed with green volume. So it came right away with red, but you see again, it's getting wicks. So there's still, right here in the part of the depth of market right here, there's still a lot of bidding going on gold. So we're back in this kind of flag. Hopefully it's a bearish flag and we'll continue to break down in here. Guys on YouTube, if you want to chat, it's on subscriber chat, I guess. So subscribe to the channel. And if you want to chat, you're welcome to chat in here, ask questions. Don't feel shy, but subscribe to the channel, please. Okay, so we got our red ignited bar. Like if we just walk through this, they gapped it down, ignited red, dropping. Okay, so we have a lot of red volume on this 5-minute bar behind us. We need, with this momentum, maybe to take out this low. And if we can close down here going into 1 p.m., maybe we'll get that hourly momentum on our side and we drop down into here. But this is the time now where we want to break this low. Like this is what I call like a statement candle. You know those candles that are making a statement here with this, the way how this candle came back up and it closed green and they gapped it down red and dropping it. This candle is a statement. So it needs to finish off the job and close strong down here. Otherwise, if it just comes down here, catches a wick, catches those buyers, and they bring it back up and they flip this, then we're going to lose all of this momentum going into 1 p.m. And that's not good for you and I if we're selling gold. See how it caught that wick again. So now it's coming up, but we still have to rely on this volume that we still have to absorb them and maybe continue to push down and squeeze as much as they can. It's going to be interesting. We got 2 more minutes to go. Amir, let's see how the 1 hour candle closes. It's now testing previous 50% of previous 1 hour candle. Thank you for the information. Amir, I love it. Thank you for, yeah, guys. So we're at a critical area. We're testing 50% of the previous 1 hour candle. That's why I'm saying, guys, 1 p.m. could bring in that hourly momentum that could go in our favor and continue to push down on that hourly 50%, or this is going to hold support and then come back up, guys. So, you know, we're at some critical psychological levels on some higher time frames. Thanks, Amir, for that. Guys, I love it. The more information you guys can feed me, I love it. Good job, Mr. Hexy Music. Blessed Gold Trade helped you break even for the day. Perfect. You know, there's not, guys. You break evens are positive days. You change your psychology to understand. If you were in drawdown and you came to break even, look at that as like you made money. Okay, I know you didn't physically make money, but you recovered your loss and it's like you made money. Your psychology should change. It should help you guys. And then stop and regroup and reanalyze, figure out what you did wrong and see how the markets are moving and ask yourself, do you want to continue trading or should you just chill out and see what's going on? Okay, break evens are good. You know, yesterday I took my first trade, I was in drawdown, and then I recovered it with the second one. I got my break even back, and then I left a little bit running into profit. So my main concern was I told you guys, I was to get my lost liquidity back. That was my goal. When I take a loss, my next trade is to get my loss back, and that's it. Then I regroup. So you see now we got they're not tweezer bottom lows. It was a lower low, but still this position is holding going into the close. It's a hanging man candle now. We still have our red volume, but now we got to see where the volume will close. Will it close below this structure that was already just made on these past 5-minute candles right here and right here? Can we close below here? At least give us that momentum that we can go forward into. Here's the close. So it did close below those bodies. Look at how they just naturally gapped it up green coming up here. Now they're pushing it down. So this is the volatility of 1 p.m. now. So this is an hourly candle. Okay, and we're still kind of barcoding here. Red, red, maybe possibly green, maybe red come back down, but it is holding this position here. So when I look at it now, like, you know, when I talk about double bottoms, here's one bottom. There's our neckline up here. It's coming down. You see the second bottom here, right here, where we're trying to break this position and drop. This is where it might build a bottom position and then start to come back up on us. But if it comes back up, I want to see it get rejected right here at this red box, and then they drop it back down. So it's all now just a game of volume. It's who is going to take control of this area right here. Like, even if I draw a green box to show you guys where this support is, what we're trying to break is this. And you see how, can you guys visually see the double bottom that we're trying to break here? So that's why when it comes up, I know that it could possibly come up, but that's why I'm trusting the offers to continue to come down and absorb. So that was nice how it came up and they flicked them back down. So now can we physically break and maybe close below here so that we can maybe flip this zone red going into next 30 minutes or 1 hour and then drop down to our bigger target down there, okay? But I'm just showing you guys how much support there is still here at this second bottom. Okay, and S&P curled up and now they're pushing it right back down. So S&P could continue to sell below here. Okay, let's watch and see too how S&P is developing right here too. That's a good rejection, guys. Sorry, I was drinking my coffee. I almost spit my coffee there. So it came up. We have our nice shooting star candle coming down. So we trapped some buyers trying to buy here at 1 p.m. But let's see. Again, we don't want to just come in the green box and catch a wick like as if we were buying, you know, when we talked about that. We want now to squeeze the buyers and we want this red volume to close below here so that we can naturally flip the green box red and stretch it across. Then we know that we got this bigger offer up here and then maybe we can build off of this one. Then it's easy to get us to our profit target down here. Okay, that's a nice, solid opening of a 1 hour candle. We allowed the buyers to buy, suck them in, and then the big seller came through. So that's what we want, but we got to follow through now. 90 seconds to go. Let's close below here. Okay, that's beautiful. That's a work of art, that candle, but we got to make a statement. Let's make a new low and close below here. Perfect. Okay, so there was just a tiny bit of drawdown, just a tiny couple pips of drawdown on this trade, not much, but we had to allow it to accumulate. Okay, and now we're pushing. Let's go. We had another Scalper Pro sell signal, number -2 sell. So it gave us the option to add another sell order, to go add another put, or go sell. Okay, I'm just still in the one trade. I'm showing you guys how the Scalper Pro works. Guys, it's great to help you out. You know, it's not mandatory in your trading, but it does help traders out. Okay, so here's the close. Last 30 seconds. Let's, robotic. Let's go through the mechanics. What do we want? We want it to close near the low. 50%, I'm already judging open close volume is right here, the bottom of my box. So you know what I want to do is I now flip it red. Hopefully it still closes below here, because if we come back up with a strong green candle, this is where I want to get it absorbed, because it might come up green, green, green. Okay, here's the close. We close near the low, not necessarily. Here's green. So if we just judge 50% of the bar, open, close, bring this red line down. There's about half of it right near our red box. So I'll just bring the red box down. Okay, right there. So we're in profit. Okay. If you want to go to a break even now or reduce your risk, you certainly can. That's up to you. But here's the big green bar I'm talking about. Okay. That was a significant drop. So there's going to be a big bid to bring it right back up. But now we're going to probably test this zone now. Okay. So sometimes some traders exit on that candle. If we're still waiting, we got to now understand that there's going to be buyers here. But we got to watch. Are they going to get absorbed? Are they going to push them down? Are we going to flag in here now? We still have this supply box above us now being built. This one is above us, so we're okay there. Let me just get rid of this. Okay, so that drop was about 20 pips down there, okay? So if you feel like you want to reduce your risk, now you take your stop loss, you can reduce it. I'm not saying you have to go to break even, but reduce it. Maybe bring it down there. Now look at our trade, okay? We got a shooting star candle. Now I suggest I'm going to a break even, okay? I'm going to go to a break even. I have zero risk in my trade now, and I'm up 25 pips with a break even, okay? Excuse me. Target if, okay, so now we want to take out this wick. That would be 30 pips to take out that wick. And then when we came down there and we came down there, there was those two wicks that bought it right back up. So it might drop 30, 35 pips and have buyers if it cannot reach this green box down in there and get the full 40, okay? But you guys, please manage your account and let me do what I do, okay? I'm not here to tell you what to do. I'm just showing you I went into the trade, minimal drawdown, allowed to break a block, and then I take my stop loss, and then now I'm at risk-free trade up 25 pips. And then if you want to scale out approach, if you feel like closing half of the trade here, close 50%, maybe you want 80% profit, maybe you want 90, maybe whatever. That's your decision, guys. I know what I need to do. You need to know what you need to do. I don't know. Someone said they got to break even for the day and they were happy with that. Someone might be in profit. Someone might be still in a loss. However you traded today, that's not my business. My business is to educate how to get into a trade and walk you through it. And it allows me to continue to do what I do and not worry about who's over leveraged and things like that. You guys got to learn this, please. And then if I say I'm out, I don't want that to affect you. Okay, so sometimes I don't say where I'm getting out or whatever. I do try to take it, like make it verbal, but sometimes I might get out early at 15, 20 pips and then the thing drops 50. And then everyone's like, Ron, shit, why did you tell me get out? Remember, I'm using different contract sizes, different lot sizes. I need to manage my own account. I'm not playing with a demo account here. Okay, so here's the natural retest back up to the red box. Rob, you closed 75% right there and left a runner. Perfect. Okay, so you see how you closed 75% majority of the trade down there, and now it's coming back up. So if we're still watching this, okay, we've got to see how it will react in this red box. Okay. And guys, I have about 5 more minutes. I'll stay till 1:15, and then I got to take off. Got to go make the kids some lunch. That's why sometimes I say, guys, it might not always come down to the bigger target, but if you're happy with 25 pips, 20, you got to make that decision, guys. You also have to look to the left of the chart, like over here. See where I was talking about these wicks? Like this wick was where it came down red, 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 red there, and it stopped 24.53.60. Also right there, it stopped. So you see they're kind of saving the market right there with that higher low right there. It's not to say that it's not going to come back down and test this later this afternoon, but right now the hourly, they dropped it and now it's coming back up. This could reverse and come all the way back up bullish now on the new 1 hour. But if we were looking to scalp one trade, that was kind of an afternoon scalp. Daniela, yeah, your spreads on gold are 20 points, so that's about 2 pips. So that's average around. Some are maybe 0.8 to 1 pips to traditional brokers are 1.2, 1.4. If you're around 2, it's still reasonable. But if you're at the 2.5s and 3 pips on gold, it is relatively high for scalping. Also S&P, guys, it is kind of breaking down over here. Okay, if you're following S&P, see how it's breaking down. The red candle did close below, so if this one kind of comes up a little bit or gets rejected, it could easily maybe take out that hourly low wick at the hourly support and drop. S&P could drop down to 5,520 if you guys are trading this afternoon. Okay, here it is red. So the green candle was very strong. Look at it. They closed it right at the high there at the top of my red box, and then it came down red ignited again. Okay, so they are protecting this position. Now we need a follow through candle to close back down here because that was a big green candle. Maybe if it comes back down here, closes below 50% of this or engulfs more, then we might have more red volume falling behind us to take out this, and then the rest of the trade will naturally fall down to the green box. And that's where either you have runners or you still are live in the trade depending on what you do, okay? Yeah, the 1 minute candle. Yeah, came right up. See, even 1 minute scalper pro buy is telling us to buy that 1 minute candle right there. We could have made maybe 10 pips, 15 pips right there on that 3 1 minute bars. So it came back down. Now it's coming back up. Though they might consolidate at this area. Okay. Do you guys have any questions about today's call? No drip, you closed 90%. Yeah, that's good, guys. Like, I hope that you guys can monitor your own P&Ls, okay? Rob, have I left Mistress Ms. Jones? No, I've kind of just, trading, alternating every day. We started Monday, start of the week with S&P, kind of give us a gauge of the entire markets. And then Tuesday we did Miss Jones on Tuesday. Wednesday was NASDAQ. And then Thursday we rotated right back to S&P. Tomorrow, guys, Friday, we will do Dow Jones alongside with gold. And we'll see how markets are moving Friday post New York tomorrow, guys. Okay. We'll see what type of volume we get. Hopefully gold can continue to maybe close below down in here, maybe continue to drip down in here. It may test this box up here and then continue. So we have our zones now, how it's trading. I hope that it continues to break down. Okay, guys, that's it for me. If you guys can all on YouTube subscribe to this Telegram channel, it's pinned at the top of the channel for you guys. Has all of our links, promos, discounts, giveaways, everything we do at Stock Sniper Trading in here. We showcase what our members are doing on the lives, on all the calls with everybody else in here, and everything that we do here. We do take the trades that are called out on the signals as long as we have proper confirmation. Some of you guys are learning all of that about our signals and getting better and better. Okay, so gold now, see how the volume is up. What we have to do is momentarily flip this box green, and that is the break even up there. So if you went to a break even, unfortunately, if it comes up there, it'll tap out on break even. So just breaking down a break even trade, you did not lose any money. If you didn't get anything down there at 20 to 25 pips, then unfortunately the market can come right back up, tag you at break even. You didn't lose, you didn't win. And then you got to either look for another trade, but keep your psychology like as a business. Okay, it happens. I don't cry about it. Don't get pissed off about it. Don't make your next trade where you're over leveraged. Markets tend to do that. It depends what security you're trading. Yes, we're doing intraday trading and scalping. The move might be 20, 25 pips, and then the market might pull back to where you entered. And then, so that's the hardest thing about holding trades longer and longer and longer duration to try and get more and more profit. You're going to have to stomach and handle pullbacks, and you're going to have to handle them professionally. It's part of the game. There's not always going to be a trade where we take and then it just drops 50, 100 pips in profit, unless we're trading Wall Street, unless we're trading news and there is volume. Other time like this in the mid-afternoon, I'm used to this, so I know. Sometimes that's why I say I'm pipping and I'm dipping 10, 15, 20, 25 pips. That's it. I'm out. I tell you guys, because I've given away so much profit in this time slot by holding and waiting for bigger trades. Unless you want to keep your stop loss, like if you continue to keep your stop loss, if it does rotate back up, it might go back down. But I kind of don't play that game. I kind of get in, get my daily goal, and get out so I can chill. So I hope you guys understand that, but that's just personally the way how I trade. I'm not trying to put that on anybody. Everybody has their own style. Everybody does their own thing. I'm just here to help educate, answer your questions, trade with you guys while I'm trading, and have some fun, okay? But today for me, I got to go make the kids some food now. I appreciate everybody on the call that joined early when the call started. If you did miss out, I was talking about the new SST, Stock Sniper Trading Super Systems Theory of Trading, that we're going to release very soon. I'm still building this whole library. The SST, Super Systems Theory of Trading, is a concept that draws on the idea of using multiple trading systems or strategies together to create a more robust and reliable trading approach. Instead of relying on a single trading system, traders employing the Super Systems Theory aim to combine different systems that complement each other with the goal of achieving better risk management and potentially higher returns on your money. So think about the psychology of taking partial trades. It helps with your psychology. It helps with growth, the growth of your account, compounding, and there's something about it, knowing if you take a trade that you won. You maybe won a little bit, but you still won. It's different from a break-even approach psychology. So taking a little bit, like how Rob Mack secured 75%, left the rest running. There's something about that. Now, when you look back, you got 75% of that trade and it's in your pocket. Yes, now after the fact, we can see it's coming down, but not always. If it closed up here, it could have been coming to take us out, our break even and drop. So our break even is still now running back in 20 pips of profit, coming down with more volume. And with more volume, we want to take out this low now. So again, we cannot judge until candle bars close. That green one came up. They knocked it down, it came back, but look at where it closed again there. Came back up, lower high, lower high, lower high. Remember, break even is right here. We're still live. Now we got a big body red candle coming in. So if you go to your higher time frames, look at it now. The 15-minute prior candle came all the way back up there, and then now it's coming down heavy. This one just opened with 12 minutes to go. So this one with this volume could definitely take out this low and come down to our green box and then net the 30, 40, maybe 50 pip trade down there. And if you have a runner, the runner's running in profit, or if you kept the entire trade, God bless if you got it. But you have to learn that you had to stomach that pullback. That's why maybe it was too early for me to go down to a break even. Maybe I should have maybe just left my stop loss above there. That was another strategy, but understand that if it came up there, you would have lost a little bit, but my original stop loss was up there. Okay, so slowly bringing it down. If you're going to watch this, okay, watch for 5-minute volume to close below here, and then use this red line as structure going forward as resistance if it closes down. Flip this green box red and continue to drive this into the future. Because these levels, these blocks are holding. So you see how we kind of just made our own little depth of market here, and SST Scalper Pro is telling us -2 times to sell. So guys, the Scalper Pro is legit. I'm telling you, this thing is awesome, guys. You don't have to just take position, like it's a learning curve. You got to learn how to use this thing. But when you find the opportunities and then Scalper Pro kind of agrees with you, then enter the trade with proper risk management. Okay, guys, that's it for me. I appreciate all of you guys. I hope you guys grab some pips out of that. It was another fun session. These are great sessions I love, but I love these sessions to be more engaging. You guys talking, asking questions, joining. I asked you guys on Zoom if someone wanted to unmute their mic and join me and talk and have a conversation. It's all good, guys. But have a good day, everyone. We'll see you guys tomorrow. Please hit the like button when you exit here and subscribe to the channel so that you guys can be part of the chat. And we'll see you guys tomorrow, 11 a.m. Eastern. Enjoy the markets with London with Shahab and Dave and Forex Borex. And if you guys are going to continue trading this afternoon, get in that Discord, go into your channel. Start a little bit, get interactive in your Forex channel with Rob Mack, because he's in there on a daily basis, catching pips on Forex pairs like crazy. So get in there, engage, have some fun, and we'll see you guys tomorrow. God bless. Thank you guys, everyone. Appreciate you guys. Have a good day.
Hey guys, good morning, welcome to the live session of Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.